For the longest time, when you heard the word crypto, your mind probably went straight to chaos. These wild price swings, tons of speculation, and just a whole lot of hype. But what if that was just Act 1? A brand new report from the bank and finance consultant group says we are now entering crypto's second act. And this one is looking a whole lot more mature, more stable, and yeah, potentially way more revolutionary. We're talking about the actual construction of the financial plumbing for a completely new global era. And if you want to get a sense of the scale we're talking about, just look at this number. As of mid-2025, the digital currency market is valued at a staggering $2.2 trillion. I mean, this is not some niche hobby in a basement anymore. It's a globally significant asset class. And the real story isn't just the size. It's the incredibly sophisticated machinery that's being built just beneath the surface.
And this quote from the report, it really just nails it. This is the key. It perfectly captures this massive sea change that we're all witnessing. The focus is shifting away from just, buying and selling tokens. Now it's all about building programmable, rule-based systems that can plug directly into the world's financial architecture. That is the transition we're going to dig into today.
So this brings us to what the report calls the Great Institutionalization. Now look, this isn't just about some hedge funds finally deciding to add Bitcoin to their portfolios. No. It's a much deeper, more structural change, where the entire ecosystem is being rebuilt from the ground up with institutional-grade capital, real regulation, and serious infrastructure.
Okay, so to really wrap our heads around how these big institutions are evaluating this space, we have to go back to the absolute basics. The three classic, time-tested rules of money. How do digital currencies actually stack up? Let's break it down one by one.
First up, unit of account. All this really is the yardstick. It's the price tag. It's how we know a coffee costs $3, not, 0.00004 Bitcoin. It gives us a common, stable language for value so that everyone is on the same page. Simple as that. And what's so fascinating here is that you can see both the problem and the really elegant solution. The report points out that, an asset like Bitcoin is just way too volatile for a business to use for its accounting. But, and this is the crucial part, look at the rise of stablecoins. You can think of them as the perfect translators between that volatile crypto world and the stable world of traditional finance. Because they hold a one-to-one peg with a dollar, they completely solve that volatility problem, giving businesses predictable cash flows and basically becoming the default unit of account for the entire digital economy. Okay, next up, store of value. This is all about an asset's ability to hold its worth over the long haul. It's the whole reason people have historically bought things like gold or real estate, right? To protect their wealth from getting eaten away by inflation over time. And this, of course, throws us right into the famous digital gold debate. The report totally acknowledges Bitcoin's potential as a long-term inflation hedge, because of its fixed supply. But its wild price swings make it a super risky short-term reserve for, say, a corporate treasury. So what are institutions actually using? Well, for their day-to-day stability, they're using stablecoins. And for the future? They're looking at tokenized real-world assets, which are basically just digital versions of physical assets, like U.S. Treasury bonds, that offer both stability and yield, but on the blockchain. And finally, that brings us to the medium of exchange. This is money's most basic, most vital job, just letting you buy and sell stuff. And honestly, this is where digital currencies are having their biggest real-world impact right now. And the scale here is it's kind of mind-blowing. We're not talking about some small experiment. Stablecoins are settling over $27 trillion a year in transactions. They become a genuine lifeline in emerging markets for everything from sending money home to just saving. Meanwhile, you've got over 130 central banks exploring their own digital currencies, and native assets like Ether are literally the fuel that's powering entire digital economies of apps and games. So we've seen how these digital assets are starting to act like money. But for them to truly function on a global scale, they need the right infrastructure. And this is where that shift from just speculation to real substance becomes crystal clear. We're moving from just talking about what these assets are to how they're going to work for everybody. The best way to think about it is like building a whole new financial highway. The report shows that first, you need to create the vehicles. That's the assets themselves, whether it's a stablecoin or a tokenized bond. Then you need the on-ramps and off-ramps. Those are the exchanges for trading. Of course, you absolutely need secure garages, custody solutions to keep billions of dollars safe. And finally, you need the actual lanes of the highway itself, the payment rails that move all that value across the globe. This comparison just puts it all into perspective, doesn't it? The past was all about speculation, hype, anonymous wallets. The future, as this report lays it out, is all about utility, regulation, institutional-grade security, and programmable finance. The crucial thing to get is that this future isn't some far-off dream. The foundations are literally being laid as we speak. So where is this all heading? What does that finished highway actually look like? Well, the report gives us a fascinating technology roadmap, projecting all the way out to 2030 to show us what we should expect as this whole thing matures.
Okay, so by 2025, which is basically right now, things like Layer 2 scaling and institutional custody are already becoming pretty common. But let's fast forward to 2030, and the vision gets so much bigger. ZK rollups, this cutting-edge tech that bundles transactions to make them faster and cheaper while keeping them private, they're expected to be the standard. The market for tokenized real-world assets is projected to hit an unbelievable $10 to $15 trillion, and programmable money will be deeply embedded in government and enterprise systems.
But here's the catch. For any of this to actually happen, for all that institutional capital to truly flow in, the industry has to play by a whole new set of rules. It has to meet environmental, social, and government standards, what we all know as ESG. And as you can see, ESG isn't just one thing. It's this holistic framework that looks at a project's environmental impact, its social responsibilities to its users and to society, and the quality and transparency of its governance. The report makes it absolutely clear. For institutions, this is no longer optional.
On the environmental front, the big story is, of course, the great energy debate. The older proof-of-work model that Bitcoin uses is incredibly energy-intensive, and that is precisely why the industry is so rapidly shifting to proof-of-stake, a system used by networks like Ethereum that is orders of magnitude more energy efficient and, critically, fully compatible with those institutional ESG mandates.
And it goes way beyond energy. The industry is also maturing on the social and governance fronts. This means balancing that amazing promise of financial inclusion with real, robust consumer protections. It means moving from mysterious founders to accountable boards and transparent audits. And it means aligning with comprehensive new rules, like Europe's landmark MiCA framework, which is designed to enforce institutional standards right across the board.
So, to wrap it all up, the picture this report paints is incredibly clear. The speculative, Wild West era of crypto is giving way to a new phase of serious institutional infrastructure building. The technology, the regulations, the capital, it's all starting to align. The plumbing for a new kind of financial system is being installed right now, under our feet. Which, of course, leaves us with the most exciting question of all. What happens next? What are we going to build on top of it? Will we see a new generation of financial services that are more efficient, more inclusive, more transparent? Or will we just recreate the old system with new technology? The future of finance is being written in real time, and believe me, it's a story you are definitely going to want to keep watching.